Hi traders, let's talk about the moving average crossovers. These are very interesting in the sense that if they're applied on the longer time frames, they can be pretty insightful. So we've got a euro dollar daily chart here with a 50 and 200 moving average crossover, which is exactly the same one as you get in the signal service. It's one of the filters. If you look at this daily chart, let's just turn the auto update off and just scroll back to periods where the moving average has crossed over. The white line is the 50, and the blue line is the 200. And if you'd set up an alert or a signal, so you got alerted when the moving average had crossed over, either up or down. So if say you put an alert in there saying tell me when the moving average is printed across down, you'd have received an email on the 12th of February 2010 in this case. That doesn't mean you necessarily want to enter exactly on that day, because you may want to just wait for a retest of resistance, or you may want to structure your trade around a pivot level or something like that for your entry. But it gives you the heads up that there could be a trade in the making. With the alert service or the signal service, you can also set up multiple conditions. So on that particular day, you could have said, tell me if the moving average crosses down, and also if price action comes to within or is greater than a particular pivot level, say for example, which will give you an indication that price was testing a resistance level, and that could have taken you in that day. Obviously, these long-term moving average crossovers can deliver pretty heavy rewards. I mean, you've got well over 1,000 pips in that move there, and it goes on. In this case here, probably not the best example, but let's run it anyway. This would have taken you in, assuming you'd entered around these levels, you'd had a short-term movement where there's 300 odd pips before the market then corrected. So you need to watch it. If you do trade these kind of scenarios, you need to be constantly aware of what's going on. So you could have trailed your stop up in that scenario and come out with a nice profit. Again, moving forward to around about here with 7th of October 2011, we've got a cross down. We had a significant spike up afterwards. You'd have probably got stopped out on that one if you'd taken it, but you can't win them all. But obviously you could have then come back into the market based upon a break of this very strong uptrend, using different entry techniques, of course, and so on. However, the important thing to note is if you start trying to use these moving average crossovers on short time frames, like this is an M5 chart, it's going to leave you with nowhere to go. It doesn't really work at all. So if you backtest these moving average crossover techniques on short time frames, it is a disaster. It's just not worth bothering with. But if you apply them on the right time frames, such as the daily, it can be very powerful, and it can deliver an awful lot of upside. So yet again, another example of how you can, if you're patient and you can set signals in the market on multiple assets using something like the FX Algo Trader Signal Service, you can basically let the market come to you and ride some pretty significant trends. We're going to be introducing a stacked moving average filter within the service soon, which will allow you to monitor 3 moving averages. So if the 3 moving averages are stacked, i.e. well separated, you'll get an alert, and those are typically scenarios where which signify a strong trend and an ideal place to enter on tests of support or tests of resistance, depending on the trend direction. So once again, thank you for watching. If you have any questions, please don't hesitate to contact me, info@fxalgotrader.com.